What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Justin Abee and Christina Means. How you doing today, guys?
Good thing.
All right, cool. I was scratching my head and going like I know I can remember this, even though I normally rely on the thing in the bottom of the Zoom frame. But I got some exciting news for both of you today. We are joined by my very favorite audience member. And why is my favorite audience member joining us today? It's because this is a chance encounter where I interview commercial real estate syndicators. That means investors, buyers, sellers, all that kind of stuff. And why would I do such a silly thing? Well, if you know how the rules work, you'll know that you're not allowed to share private deals, which are often called 506B syndications. You're not allowed to share them unless you have a documented prior substantive relationship, and otherwise they'll get ants in their pants. And so that's what I'm up to. I'm finding out people's level of sophistication, appetite for risk, what their core competencies are, and all that kind of fun stuff. But the payoff for you is you get to learn how to effectively communicate on the subject of a commercial real estate deal and find out how my guest fits into those. But before we get too excited, I guess I'll take turns. Christina, did you have anything you wanted to use to introduce yourself a little bit before we get into your businesses?
I grew up in the area. Got into real estate by realizing I needed some non-W-2 forms of income. So moved towards real estate.
I love it. And Justin, how about you? Do you want to introduce yourself a little bit? Yeah, sorry, I don't know what's going on with your microphone, but like it's cutting out super duper bad.
How about now?
Oh, that's better.
Okay. So yeah, my name is Justin. I live in Oakland, as Christina mentioned. I've been in real estate ever since I can remember. My father and grandfather had a real estate business that I helped out with over the years, doing flips and ground up builds. Also pursued a design career and then back into real estate, into the multifamily. Yeah, we're excited to be here with you.
Gotcha. Beautiful. All right. And so the first segment that we do here, it's the five distinct motivations. Before I do that, though, I got to say, but wait, check your eight. Guys, I don't know if you can see through the camera and into the audience's device, but down there might be this hideous button that says subscribe that they really should do something about. Okay, it's a stupid joke, but I do it in every episode. But anyway, so the five distinct motivations. I've talked to a whole whack of syndicators, investors in commercial real estate, and all that kind of fun stuff. And everybody has their own unique why. But when you get down to brass tacks, I found they fit very nicely into these five different categories. And it's super important that we know each other's why or motivations because hey, commercial real estate deals, they take a while. There's plenty of risks involved. We need to know that people are going to actually follow through with the deals and make them happen. And so that's why knowing these motivations are so important. The first of which is preservation of purchasing power. What's that all about? Well, some people, they already have a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership. And the only time that they're going to make a new acquisition, if that's the case, is if either inflation is eating away at the purchasing power of the cash flow, or if they can buy at a steep discount, which happens whenever there's an asset crash or anything like that. That is not what I'm up to. What I'm up to is trading time directly for wealth. What's that all about? Well, I come from a tech background. Specifically, I've owned a CRM agency for mass marketing, for capital raising, for all of these different things that you'd need an online funnel for. So that's also for like ebooks and courses and live events. But the problem I had is I was watching my boss flipping 10 houses a month, making way more than I was. And more importantly, I also found out that people who have a W-2 and are high wage, high salary earners, they are paying more in tax than anybody else. So it hit me as how can I pivot and use my skills where I'm getting rewarded in the form of deployed capital, aka equity, instead of cash and paying all that tax out the wazoo. But that's my reason. It's rather uncommon one, but a lot of people who are fresh into commercial real estate, the thing that drew them to it is fast tracking retirement, or more specifically, taking control of your schedule. And maybe that means that they want to actually retire early, but it might mean that they just want to work fewer months per year or fewer weeks per month, something like that. But the main idea is to dial things back, scale things back eventually, which is in stark contrast to this next group. They are so ambitious. They're after that generational wealth. They want to buy their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. And so they're going to be hustling into their 90s, and that's why they're making these acquisitions. And so as you can see, that's not a scaling back sort of motivation, which is the same as the fifth one here, the last one, which is some people, they've picked a sector of society, or maybe it's animals, maybe it's the environment, whoever it is, they realize that there is a big financial component to making a big impact in the world. And so that's why they are making these acquisitions and building their portfolio. But as far as you two go, it might be different. Of those 5 different motivations, what combination of them would you say describes you best? Christina, do you want to go first?
Yeah, so we are definitely dealing with a little bit with the helping people who need it. So our company is Pinnacle Community Capital. I'm the board president of a small nonprofit here in Oakland, California. So I'm very driven by connecting with communities and making sure that is one of our main emphases.
Mm-hmm.
You want to chat about the other one, Justin?
Yeah, I think it's a combination of a few of these. As you mentioned, the social good aspect of it. The buying back our time is the thing, working for ourselves to create our own destiny, and then also just creating generational wealth for our family, and getting to a point where we currently do a lot of volunteering and providing our time. We want to also be able to provide monetarily towards the causes that we really find important.
Mm-hmm. Mm-hmm. Awesome. And magically, we're back. So help people who need it was a big one for both of you guys. But the next question I have has to do with tolerance for risk. And I need to make sure that whoever I end up working with, any partners that are on our team, we need to make sure that they understand that there are risks involved. Like, it's very easy to say, it's like, oh, well, there's all this money involved in these commercial real estate deals. I'll get in it and everything will be just fine. It's like, well, it's a competitive industry. I like to make the joke that real estate is the world's second oldest profession. So you need to understand these risks. And the way I do that, I saw the questionnaire that securities attorneys generally insist that people have their investors fill out. And I wasn't satisfied with the one about risk. So I made this fill in the blanks question. And the question is, there are many popular investment asset classes, but I think blank is too risky. Justin, it can be real estate or outside of it, but do you want to start it off?
Yeah, sure. I think Beanie Babies are too risky.
Beanie Babies, that's a very solid call.
Yeah.
I
I think they're a devaluing asset at the moment and have been for a long time.
Yeah, something to the tune of pushing 40 years or something.
Yeah, exactly.
That's funny. So I don't know if you had another one, or Christina, do you want to take it away? What's too risky for you?
I am not a huge crypto person. I find that to be something slightly beyond my understanding and something I'm not really wanting to put money into.
And very volatile.
Yeah, yeah. And the fact is, you can't eat it, unlike this subscribe sandwich. That thing just kills me every single time. And it's a great segue into the next part where I talk about the 6 different roles in a commercial deal. And to do that, I use the dandoesdeals.com core commercial competency cube. You can try saying that a few times fast. But the idea is we've got the 6 different roles in a commercial deal. And the idea is I want to make sure that you can effectively communicate on the subject of commercial real estate. So I make it so you can print this out, and I don't even ask for your email address, which from a marketing perspective, that's the worst idea possible, is not to ask for the contact information in return for your freebie. But the important thing is I go through all 6 sides in every episode, and it only takes a couple minutes, but this way you will understand how my guests fit into these deals. So let's start off with the repositioner. The repositioner looks at a bunch of different properties and does a bunch of paperwork. What are they doing with this paperwork? Well, there's a fancy word for it. They underwrite the deal. That means they're doing the math, they're doing the arithmetic, they're figuring out, first of all, is this property actually making the amount of money that the broker and seller claim it is? Because there's a huge chance that they're off by, quite a bit. And so the repositioner's job is, first of all, find out how much it's making. But the real reason why they're doing this underwriting is they're figuring out how can they change how the property is run or something about the business so that there's more upside. They're finding that upside. And the first thing that a repositioner is going to do, every repositioner has financier or investor relations as part of their job. And financiers are people, okay, I got like a picture of a bank here. So the idea of the financiers is those are people who only deal with paper and money. They do not do any work on the deals. But the thing is, the financier relations are key to every repositioner, every sponsor, because if you can get a more advantageous loan, that goes straight to the bottom line, the profitability of the business, because it means they can operate for less money. The debt service is lower. But the next place that the repositioner is going to look is going to be the operations team. They're going to see, hey, how can we get these Benjamins to stop going down the toilet here? But of course, there's a lot more to operations than just fixing toilets and mowing lawns and collecting rent. For me personally, because of my marketing and my CRM background, there's the automation part, but marketing comes in whenever, like, even if you have the bigger size apartment complexes, like the 100+ that I generally look at, you may have an issue, even if you're outsourcing to a property management company. If you have a vacancy rate issue, you're really behind the 8 ball if you don't have any marketing chops. So that way somebody like me can step in and help with that vacancy rate. But of course, operations, there's only so much you can do. Commercial real estate is very competitive, so that's probably not going to be enough upside. So the next place the repositioner is going to look is to get a contractor team involved, and they are going to do a value add. In other words, they're going to do renovations. They're going to fix the place up so that the next resident will be happy to pay more in rent than the previous one, and that's straight upside. But it's not like you can just go ahead and build a bunch of stuff and make the units nicer and charge whatever you want. It has to be able to ROI. So you have to be very careful. You have to keep an eye on these guys to make sure that they're staying on schedule. They're not using subadequate parts and materials and things like that. But if you are like me, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because you can bet that will not be me, because I'd still be stuck at an airport in an hour or two. But the locals make sure that the contractors aren't cutting corners. They're keeping the schedule. They're making sure that the operations, it's making sure that the photos they send you and details they tell you, they aren't kind of glossing over unpleasant facts. But you need those boots on the ground. But when the repositioner has assembled this team and they figured out which property they're going to go for, they turn around to the financiers and say something along the lines of, hey, check out this property. It's like 350 units in tens of millions of dollars. You don't happen to say have tens of millions of dollars you want to lend us, do you? And then the financier is going to have one big burning question in their mind after seeing everything that I just mentioned, which is, who is the sponsor KP. And what's that all about? Let's say, hypothetically, you're a physician or an engineer or something like that. You have some friends with some means and you decide to pool some assets, pool some capital to take over a commercial property like an apartment complex. The snag you're going to run into is that somebody in the fold has to already own a similar asset if you want to be eligible for a commercial loan. So that means you have to have somebody who already owns a similar asset. So if you want to buy a 350 unit apartment complex, somebody has to already own one. But on top of that, you're also going to need a balance sheet among the GP team of at least the amount of the loan. And you're also going to need a certain amount of liquidity. But if you have all those pieces, you've got yourself a commercial real estate deal. So guys, as far as you two, your core competencies go, what combination of these would you say describes you best? What sides of the die are you guys going to take care of?
Justin and I are focusing on bringing in capital. So living in California, we have a lot of access to people that have money languishing in places that perhaps isn't giving them a great return. So we are utilizing our relationships to do that.
Yeah, and specifically in investor relations and communicating with our investors and letting them know how our projects are going, and also legal compliance, marketing, and so on. So we're really contributing a lot to the projects that we work on.
Exactly. So lots of asset management as well, I'm sure. But
Yes.
the next question then, it has to do with the buy box or ideal property. And when syndicators, investors, peers are talking about what you're looking for, what's your buy box, what's your ideal property, we're really asking them for three main things. First one's going to be geography. Where is it? Okay. Which state, which county, possibly even which neighborhood. Okay. That's all going to matter if we're going to call it ideal. The second one has to do with size. And generally on this show, most of my guests are in multifamily. And the way that you count size in multifamily is by unit count. And the reason why that's so important is because you're going to have a completely different group of people taking over 5 and 15 unit apartment complexes compared to the 150 and up apartment complexes. So that size definitely matters. There are other forms of commercial real estate that also use unit count. Some use square footage like industrial and things like that, but you need to know the size. But the third one is called class. And personally, I don't know about you, I don't like it when people use the same word for two completely different things. And so I separate the word class into two parts. You often get these two different ratings when it comes to class. And the first one, I call it condition. So that has to do with how old the building, how beat up is the building, how up to date is the building. And then as far as like luxuries and amenities, is it like totally no frills, or is it just chock full of wonderful extras that the residents can enjoy? So that's the first one, the condition part of class. But the other side, it's called area, is the other word I use for it. And when we're talking about the area, we're talking about things like, what's the crime rate like where the property is located? What are the school districts like where the property is located? And then of course, how many people go by that area in a given day? That's really going to dictate how desirable the property is. But both of those two definitions of class, they're rated the same way as in grade school, where you got A plus at the top and then A under that and then A minus and B plus and so on. So as far as you guys go, what's ideal as far as your next property goes?
Yeah, sure. I'll take this one. We look for 1985 or newer vintage properties with pitch roofs. We look for, in the syndication realm, we're looking for 50 to 150 plus units. When I say plus, we're always willing to go higher. It's just the amount of people that are involved to raise capital. We are looking for value add projects in condition of C or B grade in areas that are B or A grade. So we're looking to reposition the asset into to fit the area essentially. So if we're looking at a C grade property, but it's in a B grade area, we want to upgrade the building to fit the area, so into a B grade property itself. And then as far as regions go, being that we're investor relations, we work to support operators around the country, but mainly through the Southeast Sun Belt and a little bit of the Midwest. So we're working in the Carolinas, Georgia, Tennessee, Alabama, Fayetteville, Arkansas, and Salt Lake City.
All right, beautiful, beautiful. So then my next question then has to do with people. And my favorite thing about commercial real estate is that people are so eager to help each other out and build new teams. I think it's because it's multifaceted. So nobody is doing all of the roles on the die for any meaningful amount of time. And that's why we're always eager to give these referrals and whatnot. But that being said, we still have our own unique skill sets. Mine's weirder than most, but that's why I tend to look for sponsors K and KPs, because they have the foundation where a guy like me can make a disproportionate difference. Of course, locals would be the other one that I'm always on the lookout, because I'm the internet guy, and that's the antithesis of it. So as far as you guys go, you know, like again, if you have any 506B deals, you got to be careful about enticing investors, but it's perfectly fine to say that, you know, you're interested in talking to people who are new to the space, or, you know, other financiers. But I also imagine you're going to need a lot of repositioners and sponsors as well. But I don't want to put words in your mouth. Who do you guys think you're disproportionately well suited to help?
Well, we're definitely working on connecting with teams. So we're looking for locals, and we're also looking for people that are very math oriented. So the people that are really good at looking at the numbers and making sure they fit. So I think it's a combination of the two. We really think that you're only as good as your weakest team member. So we definitely want to make sure we're working with people that are seasoned. So the KP is also very important for us. We want to make sure we can both support them, but also learn from them and use their experience.
I love that answer. That's great. So then the next question then has to do with how to reach out. And I got this distinct last name, so it makes me really easy to find. LinkedIn is the platform where I spend most of the time, so that's the best one to reach out on. But if you scan this QR code with your phone, that will bring you to the FAQs page of 506BME, which is the platform I offer to house the documentation of your substantive relationships among your investor list, making sure that you actually have documented proof that you knew people's level of sophistication, appetite for risk, and you were very upfront about all that sort of fun stuff. But as far as you guys go, you guys have your QR code, you got a phone number on there, got lots of different stuff. Is it a social media platform that is the best way to reach out, or is it through the website, or how should people reach out, guys?
Well, the QR code right up here is to our website, and it has our emails and contact information there. And yeah, we're on social platforms as well. So you can search us out, Pinnacle Community Capital. And yeah, that's the best way to reach us.
Excellent.
I'm also pretty active on LinkedIn, and I've been really enjoying connecting with people there as well.
Perfect. Great. And then the last thing then, it's actually not for you two, it's you in the audience. It's a public service announcement, which is, if you've been watching this episode and you've been experiencing searing pains in your eyeballs, maybe like migraine-like symptoms, I'm confident it's the hideous red subscribe button that's down here. And if you want to get rid of it, you just click on it and it's free. It does, cost you absolutely nothing. I'm biased. I want people to hit it, because if enough people hit it, then YouTube will actually start to pay for these videos instead of me. And I think that would be absolutely amazing. As I said, it doesn't cost you anything. All it really means, the effect as far as you're concerned, is my videos might show up on your list of suggestions, but you can go ahead and ignore those suggestions. I quite frankly just appreciate the fact you spent this time with me, just like Justin and Christina. I'm glad you joined me today. This has been great getting to know you guys a little bit better.
Awesome. Same here, Dan.
Thanks, Dan.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, You can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506 B me, everybody.